Good evening. I'm Peter Reznicek from ShadowTrader.net, and this is the weekend edition. As you can see, I'm recording this on a Wednesday. Today is July 31st, so it's a little bit of a special show because I usually record on Fridays. I do have some travel commitments at the end of this week, so I'll not be able to do the show on the normal time, but I wanted to leave you with a show midweek, especially since we are post-Fed and also at the end of a month. So this show is going to deal mostly just with a technical overview of what's going on monthly charts and some very interesting things that I'm seeing on the daily charts of the S&P and NASDAQ, also with a couple of trade updates. So without further ado, let's get into it. As I was saying in the introduction, this shorter program this week is going to deal mostly with technical analysis for a couple of reasons. As I was saying, not only are we post-Fed, post-end of the month, but this has also been a very, very pivotal week, I think, for the markets technically in terms of what's going on. Most of that you're going to see on the daily charts of the S&P and the NASDAQ. But we're going to begin on the monthlies because, as I said, it is July 31st and we just wrapped up another monthly bar. So we're going to kick it off here on the monthlies. Remember, these monthly charts are really, really sometimes tough to read in that you don't want to get too far ahead of yourself if you see a reversal type signal because it can often take a long time to play out. Remember that the activity inside of the bar is 20 trading days, right? So you have to just keep that in mind. But I did want to point out that on this monthly, we do have somewhat of the topping tail here. It's a little bit of an exhaustion on the top side on the monthly. And I've mentioned this before that I'm not a big believer in the whole bottoming tail hammer or shadow or whatever on the smaller time frames. And when we get out to like weeklies and monthlies, that's when I start to really pay attention. And I've noticed in my experience that on monthly charts, they can have an effect. So we could actually, move a bit lower, but the bigger signal would obviously have to happen underneath this month's low, which really is all the way down to 5,400. So that's a long way away in terms of just trading this as a monthly bar, playing the low of the bar for the reversal. It's quite a long ways away. But I just wanted to leave you with that just to show you that we do have in the month of July a little bit of a exhausting looking candle with a little bit of a tail on it in the S&P. Sticking with the theme here of how the monthly bars played out, we're shifting now over to the NASDAQ 100, the other market that we watch most closely. As I've mentioned many times before, I really watch only the S&P 500 and the NASDAQ 100. Those are the two most important markets in my opinion. The NASDAQ 100 has a little bit slightly more bearish candle for the long term for the monthly charts than you see on the S&P. Notice that when you look at that bar, not only is there the exhaustion to the upside, you have the tail, but the body is also red. This makes perfect sense to me because we've been seeing this rotational trade out of technology and into some of these other sectors over the course of all of July, right? I talked about that for many, many times in this program, saying that selling in this market has not been very broad-based or strong. It's been more rotational, and it's been more along the lines of taking money out of technology and feeding it into financials, consumer discretionary, staples, etc., some of the other 11 S&P sectors. So it makes perfect sense that we've got a slightly more bearish bar in the NASDAQ, but I just want you to keep in mind that exhaustion is there, slightly more bearish bar, NASDAQ 100 with a topping tail similar to the S&P. Lastly, I wanted to check out a monthly chart of the Russell, not a market that we look at that often on this show, but it is one to pay attention to because it is very typical that as we come into an easing cycle for interest rates, and it seems that way. It seems to me that Powell affirmed today in the July 31st meeting this afternoon that the cut for September was on the table, and then we'll have to see after that. Obviously, he's not going to tell you definitively if it is or not, but the language and rhetoric, so to speak, was leaning in that direction that a cut is going to happen in September. And small caps certainly are the beneficiaries of that, right? These are smaller corporations. Many of very often are more indebted, not yet profitable, et cetera. So the lower interest rates definitely help them a lot. And you can see how much stronger the monthly bar was on the Russell. And I wanted to specifically end these monthly charts on the Russell once again, just to drive home the point of how important this rotational aspect of the market is that all the selling that we saw in the month of July was relatively weak. It was not really broad-based. And not only was the money coming out of technology and a little bit out of the NASDAQ 100 into other sectors in the S&P, but a lot of that money also went right here into the Russell. And I'm a big believer, as I've said many times, that when a real bearish market is on, there shouldn't be any place to hide. You would not see the Russell going up like this all month if it was really bearish. So for now, it feels like there's really no strong selling out there, and any money that's coming out of technology is going into other S&P sectors and also into the Russell 2000. So you may want to consider IWM or any of these small cap names long. If the market holds up from here, these may tend to outperform. Now that we've done our once a month look at the monthly charts, which really only makes sense to look at the end of the month, which is the reason that we're doing them today, here's where the real TA happens, which is on the daily chart. So we're going to start with this S&P. And as I was saying in the intro, there is a lot going on here, a lot to unpack, really, really important TA going on here. So the first thing to note is that as we came down a bit here in the markets here, we then formed this consolidation range here, which I feel like a lot of people thought was more bearish than it was, and certainly may have sucked in some sellers into this market who I think had poor location. And that's what basically caused the gap up today, because we had some news overnight that some favorable ruling out of China for semiconductors, et cetera. NVIDIA gapped up off some support, and it took the market much, much higher into the FOMC meeting. And as you can see from the daily bar, after the FOMC announcement came out, which was, of course, no change in rates, but reaffirming, if you will, that September cut is on the table, the market went up quite a bit higher and still closed higher, didn't do too much net after that. But the main thing is that we didn't fall, right? Is the fact that the daily bar stayed super duper strong and we held up above this consolidation area. And that's what I think is really, really important. Going forward, I feel like this definitely has the potential to continue to move forward, because the type of shock and awe, for lack of a better word, in terms of all of these people inside of the consolidation area, many of them being wrong, right? I feel like the trade inside of this area was more or less net short, because you can see there was big body candle to the downside, big body candle to the downside, and another one here. There were actually 3 out of the 5 sessions where sellers really dominated that day's bar. And now to open up outside of that is really a lot of shock and awe. And it's going to be difficult, I think, for the market to come down into this area from here, just given the fact that it took so much work to get out of the area. And you have to remember, shorts don't generally cover all at once, right? There are still people, I believe, who are holding short this market. So as you get some sort of movement down a little bit, I think it'll be more like this, where you will start to get these shorts covering. Now, the only thing that's going to all out negate this, obviously, and we have to play devil's advocate because anything can happen, would be the movement below that consolidation low, right? Obviously, that would negate this whole picture and the market would prove itself to be quite weak. But I don't really foresee that happening. Right now, I'm cautiously bullish. I only now started stepping into positions today after the Fed announcement, very, very slowly. I don't have a whole lot on to the bullish side, but I'm basically favoring that side as we go forward. Notice also on the moving averages that we watch very closely, which is the 8 and 21. The dotted line is the 8 and the 21 is the straight line, right? The pinch activity that we got, which was right here, of the 8 moving down through the 21, it was very, very benign, and it didn't really result in any follow through at all in terms of that moving average, like going like this and moving lower. It really just went sideways. And now the price action is back above both of them. And I think that's interesting. So what you want to be watching for, if this market goes even just sideways to up over the course of next week, is you want to be watching to see if that 8 EMA pinches back up through the 21. That would be a strong buy signal, especially given the fact that when it went below, it really only spent these 5 days of the consolidation below, and it wasn't that definitive of a pinch. It was a true pinch. The 8 did close below the 21 and it stayed there. But usually when the 8 pinches through the 21 on the downside, that 8 gets a much faster trajectory downward, right? It would create some sort of a steeper downward slope and start to really move down aggressively. And we didn't see that at all here. It just sort of rode underneath the 21. So keep all this in mind as you set up your charts and as you start looking for trades in next week. And onto the NASDAQ 100, which is a really, really important index. Obviously, everybody should be watching. Same situation. In this one, I drew in the downtrend line. You see we're well above it. The candle here on the dailies actually looks a little bit more even healthier to me than on the S&P. And once again, it's the same exact thing, except the only difference is that because that tech was so much weaker in the month of July, when we got the pinch here, of the 8 through the 21. This is what I was saying in the past chart, that the trajectory of it was a little bit steeper, right? You had that 8 EMA moving down. But again, what's happening now is it's starting to turn up. But of course, because that selling was stronger in the NASDAQ 100, it's got a little bit more room to go before it can climb up to that 21. So that's going to be very, very interesting. But overall, once again, the main issue here that I think everybody needs to focus on is the fact that when you have congestion, especially when you have congestion at the low end of a range, and that congestion at the low end of a range, which is a classic bear flag, right, down and then across, when that flag portion of the pattern doesn't turn into lower prices, lots of people are disappointed, right? Everybody's disappointed, and that's what makes prices go higher. Even if they just sort of crawl higher after that, it's just harder for sellers to get a foothold because shorts are covering at every turn, and they're really, those shorts covering continue to support prices. So I think that's what we're going to see here in the NASDAQ 100. And again, like I was saying in the S&P, the only thing that negates this pattern is if something out of the blue happens and takes the market back down below this consolidation or even deeper into that range. But as of now, playing it on just a basic technical basis, I don't see that, and we should see the NASDAQ 100 float higher along with the S&P. At the very least, be watching for that 21 EMA that I circled, which is 19,518.91. So call it 19,520. Watch for that area in the NDX at the very least as a short-term target moving up out of this pattern. As we are recording a shortened show this week, I do not have a true number one draft pick for you, meaning that I don't have a new trade idea for you. However, I want to update you on 2 trade ideas that I have given you in this program in the past. In the past, I did a sector watch on XLU on utilities, saying that I felt utilities should move higher. And we also did a number one draft pick at one point on bonds, on the long bond, on TLT. So let's take a look at both of those charts now. I'm going to move over here to the weekly chart here of TLT. These are the bonds right here. And I just wanted to point out how it's so important that this is a long-term trend. I've been saying for a long time that I have this trade on starting from somewhere down around here. I was looking at the bonds long, and I've been sitting in this for a while, if you recall. And now the wedge that's been forming for such a long time, this is on a weekly chart. Look at this wedge that has formed. What has just happened? Breakout to the upside. Makes perfect sense, right? We know that the odds of a cut in September are pretty high now, and we also know that the odds for the Fed to be on a trajectory to further cut rates in 2025 is basically happening, right? I think we'd all be very, very surprised if they don't do anything in next year. So these bonds are starting to get ahead of it, and I do believe that they are going to continue to float higher. So this is just a brief update on this trade. The movement outside of the downtrend line thus far is not that big yet that you can't get in this trade. It's not like you have missed this trade if you're not in it from a little ways back, because this is a move that I believe is just beginning to start and is going to be in play from now until at least the middle of 2025. So keep these long bonds in mind, and I do believe that they're going to continue to move higher. And on to utilities, which are kind of bond-ish, right? This is actually the most bond-like sector of the 11 sectors that make up the S&P. So it makes perfect sense that if TLT is moving higher, XLU is probably moving higher. And I purposely kept this on the same weekly time frame that we were just looking at the bonds on. And look at how bullish this week has been. In relation not only to everything else, but in relation to the chart. Straight up candle, big body, taking us where? To a prior high here on the XLU, right to this area around 73-ish. And I've purposely left these trend lines in to show you how price is now starting to pull away from the trend line, which is very bullish. It's not in any way, shape, or form overextended or parabolic, but notice that you created a primary uptrend line from the lows down here in October, right? That has moved up like this, and then it started moving up faster, started accelerating, so you created this secondary trend line, and that continues to be intact. So I am long utilities as well as bonds, and I do believe this trade has a little bit more room to run. It also, if you think about it, on a breakout pattern, it could be entered right now, right? If you're not already in the utilities trade, now you have a potential upside breakout above this high here, where there was a number of weeks of congestion here where it got stuck. And I do think, again, over time, end of 2024 into 2025, I think you're going to see utilities probably on a trajectory at the very least up to here to about the 78 area on the XLU utilities ETF. As it is a shortened show this week, I wanted to leave you with a email that I received recently from a subscriber. This is actually very, very typical of emails that I receive very, very often from subscribers. I often say I am in a very enviable position because I get to teach a lot of traders, spend a lot of time with lots of different traders, which I love, but I also get to get feedback from them and also like to get an idea of how they're feeling bullish or bearish or what's kind of plaguing them in the markets, what's doing well for them, what's not. And it's really a very it's exciting for me because it gives me a lot of information about the market itself. But this particular email here, I wanted to share with you because, again, it's typical of types I get very, very often. As you know, I do run a room called Weekly Options Room. We call it Weekly Options Advisory. I am live every day for about 2 to 3 hours every morning. And in that advisory, I do real-time trades that are cut and paste from my own real money account and sent through our ShadowTrader dedicated mobile app. And those trades have been going on for about 5.5 to 6 years now, and we have a fantastic track record where those trades are essentially at their high water mark for profits almost at all times. As I speak to you right now, we are currently at our high water mark. Again, we generally usually are at our high water mark. This whole advisory has never had any real significant drawdowns ever. But that being said, that's why I wanted to share this email with you specifically, because this is a gentleman who specifically tells me that it's really not about the trades. And I wanted to tell you a little bit more about that to give you an idea of what I do every day. And he says, my goodness, how spot on were you? I've traded for years, but I'm fairly new to options trading room subscriber, having better success than I've ever had, not necessarily following your trades, but following your teachings and perspectives. Really appreciate you and the weekend postings as well. Thanks again from a gentleman named Scott. So that's the thing, is that I am so proud of the track record and the trades, but it's not about that, I should say it's not only about that. For a lot of my subscribers, again, this is very typical of emails that I receive where people will tell me, I love what you're doing. I don't necessarily trade that style. I trade a different style. I don't do the trades, but the guidance that I get, keeping me on the right side of the market, the things that you are calling out every day, all morning, in terms of what I should be looking at, market internals, market profile, where the turns in the market are going to be. Basically, keeping traders on the right side of the game. That is really what I do best. And it makes me extremely happy to receive emails like this that are affirming that that is all working. So remember, you can always take a $7 1-week trial to my room at any time. The link is in the description below. Come check me out, and I'd love to see you in the room. And that's all for the show this week. As I've been saying, kind of a shorter show, and I'm recording midweek here on July 31st on a Wednesday rather than Friday. Next week's show is going to be more of a full show, what you're used to. We'll have all the different segments that we usually do, and it'll be a little bit more fleshed out show as we'll be doing it at the end of the week. So what are some of the salient points that we need to remember from this week's trade, at least up to Wednesday and into the FOMC where we are now? I would say number one, all selling in the month of July has been somewhat rotational, right? I talked about that even before the month started. Whenever we saw any selling, I said many, many times, I said, this is not strong selling. This is the type of selling that is rotational, because I would continue to see those 11 sectors be multicolored, not all red, money coming out of technology, just taking some of that froth out and going into other sectors. I believe with a rate cut on the table on September, that should continue, and we should continue to see that, right? From a technical basis, remember, we just got out of a very tight consolidation range, which was many days. It actually had a quadruple top along the top of it in the S&P, if you notice, and we're now above that. For that reason, I do think it's going to be a little bit more difficult for sellers to get a foothold. Anything can happen. If we come deep into that range, then it tends to negate the thesis. But for now, I feel like the odds favor a slow grind higher from here as we move closer to that rate cut in September. All right. That's all for this week. As always, if you could, please hit the like and subscribe buttons and that little bell icon so that you get notified whenever Shadow Trader posts new content, which, as you know, is every single day through our Shadow Shorts program. I'm Peter Rezicek, ShadowTrader.net, coming at you from Los Angeles, California. As always, I wish you good trading and good night.